So when we talk about cost accumulation, it is always that we have to be discussing about inventory and how the organizations normally manage it. And in these scenarios, we normally say that inventory valuation is a periodic process of determining the quantity and the prices of the stock of items. So remember, when we are going to be doing cost accumulation, we have to be looking on the inventory valuations. So in these scenarios, we are saying that inventory, when you discuss about the inventory, it is the investments, it is the investments, um, so when I discuss about the inventory, I'm aware that inventory is the investment in the raw materials. Investment in raw materials. The investment in raw materials. We discuss about work in progress, and finished goods, So that is the thing that you're going to be looking at under the inventory, because the investment in the raw materials, when you normally go to the market to purchase the raw materials. The work in progress is when you want to produce. So we are producing a certain product, and then at the end of the day, we're going to be having the finished products. So in business transactions, we normally say that the stocks are normally purchased at different prices. And that is one of the key things that you need to be understanding, that when you're going to be doing the investment in the raw materials, due to the inflation and demand supply forces, the prices of the commodities will be different. And in this scenario, we are going to be having some challenges of determining profit determination, sorry. And we are saying it is not easy to identify the individual item in the stock, because which is specific purchase price, because already we normally purchase materials and then we hold them within the organization. So when we hold this material within the organization, we are saying that it is therefore advisable to devise a method of determining the prices, because the product that you purchased at different periods are going to be stored in the same store, and therefore during the time that you're going to be issuing, and we don't want the organization to be having poor recording, we have to be maintaining a certain, we have to be using certain systems. So in this scenario, we say we normally have two methods. We normally have two methods used. Or two systems. Let me talk about two systems. Two systems used in stock valuation. So which are the two systems? Number A, we normally discuss about periodic stock valuation. Then the other one, B, we normally discuss about perpetual stock valuation. So one of the key things that you are supposed to be asking me, what is a periodic stock valuation? And when you are discussing about a periodic stock valuation, which is normally also called as a stock take method of valuation, it is normally involves counting, verification, and checking of stock items at the end of the accounting period. So if we are going to be confirming, doing verification, and also we do counting. At the end of the accounting period. So in this scenario, you really understand that at the end of the accounting period is when you are going to be doing our stock valuation. I know very well that in certain controls that is not appropriate, because misappropriations, because the misappropriations that were done at the beginning of the accounting period will be able to be identified at the end of the accounting period, which is not appropriate in accounting. So we are saying the perpetual periodic, the stock valuation, we are saying, is also known as the continuous inventory system. And we are saying that the method it is a continuous basis, and that is where we normally advise the organization to use a continuous inventory system. We normally use a continuous inventory system, and we are saying that so that after each and every transaction, the records are normally updated. Right? So this is advantageous. Is advantageous because the systems are the products when they so that after every is because after issuing the products, the records are updated. So one of the key problems that you're going to be having under the continuous inventory system is that it has to be supported by periodic system, right? The key problem, the problem of perpetual stock valuation is it should be supported by a periodic system, which will be assisting the organization in keeping the records. And that is where we are saying we are supposed to be having a certain system. I'm aware that you are able to know that most of the organization are having different methods of handling these issues. And that is where we are saying that such kind of methods which are normally used, here you can say methods used under perpetual includes, so the method that we normally devise, number A, we normally have first in, first out method. That is what we discussed about before. Then B, we normally talk about last in, first out. This is LIFO. Then number C, we normally have weighted average method. We normally have number 4, which we normally talk about simple average method. Then the last one, we normally have standard price method. So I just want to break down and doing illustration of each because these methods are basically are mostly tested in your exams currently. Before they were not, but right now they are testing any method. And when I look on last semester, they tested the weighted average method. We shall be able to do that question. The previous semester, they tested the first in first out method, which has been mostly tested since 2015. We have the last in last out, which you are going to be doing the illustration to show you how you have to be calculating it using of the existing questions. Then we have the simple average method, which is yet to be tested, but we are going to also be applying the same, but I will be able to explain for the standard price method and I give it as an example, not an example, but as an assignment for you to be able to calculate it at home. So that is not important. That is not the case because I know you will be able to do it. I just want to start with the first one. We start with the first in first out method. First in first out method, and the first in first out method which it is normally called FIFO. It is the first method that you're going to be handling. And we are saying it is a method of stock valuation. You use the items which are the items that we are able to purchase first, we are assumed to be issued first. And here we are discussing about items which are received first, are assumed to be issued first. So this is very key. Remember, we are going to be having the issues of items which are normally purchased and issued first. And basically, the thing that we normally take this method is when we are dealing with perishable items, perishable products. They normally basically use this method. The items which are received first, because the perishable items which are which can be able to spoil, we cannot be able to hold them for long. So in this case, the items which you receive first, you're going to be issued them first. Now, when I look on the illustration of the first in first out, I just want to do a question of November 2020. So we are going to be doing November 2020, question number 1B. November 2020, question 1B. We just want to know how do we, and you know very well that these are the store ledger cards. Here you are not reporting any profits. The examiner normally confuse the students by including the selling prices in the question. And remember here, you maintain a store ledger card. So now you are issuing the unit. It's not about reporting a profit. That is the difference which we normally experience under this area. So I just want to share the question. You read for me. So the question is here. So it should be question 1A, sorry. So you can read for me. Question number 1A. Hello? Hi, Joy. I hope you are still there. Let me continue. Question 1, we are being told that Major Limited is a manufacturing firm operating in the textile industry. So the company recorded the following transactions in relation to the product BT during the month of January 2020. So we are being given the dates, purchase and sales. And then the additional information provided there. We are being told that the opening inventory of product BT on 1st January 2020 comprised of 9,500 units, purchased at a cost of 135. On the additional information, we have been told on 9th January 2020, the company reported a shortage of 300 units. The third one, we are saying on 19th January 2020, 600 units of the units sold on 17 were returned by the customer. So what we are being required there, we are being told a store ledger account for the month of January 2020 using first in first out method of inventory valuation. Then number 2, we have been told the value of the closing stock. And when you look on the question, it normally commands good marks. So in this case, in this scenario, because we are going to be preparing the store ledger cards, we normally follow the dates as per given by the examiner. You don't need to be jumping any date. We follow the dates as given in ascending order. So in this case, we normally want to maintain a store ledger card. Remember, I have said you don't report a profit here. This is not a profit that you're reporting. So this is how you normally do the question. This is how you have to be doing the question. Once you find the time you can speak with me, I know we are together. So in this case, we have your dates here. We are going to be recording our dates. We have our receipts. Receipts are your purchases. Remember that. Then we have our issues, right? And then we have our balances here. We have our balances. So the receipts here, we normally record the units. We have cost per unit, then token amount. Also, when you are issuing, this is the time when you are selling, you are going to be recording your units, cost per unit. Then we also have amount. The last thing that we have to be doing is the units here for balances, cost per unit. And then later, we are going to be managing our amounts there. They should be like that. It should be like that. So in additional information number 1, the examiner has already given you the information there. Additional information number 1, the examiner has already given you an information there where he's saying that we have the opening inventories. So the examiner is saying the opening inventory of productivity on 1st January 2020 comprised of 9,500 units purchased at a cost of 135 shillings per unit. So here it means when we are opening our month, we had some balances. So you record your 1st January here. 1st January. Remember, we had certain units there. We are being given 9,500 units, which are your balances. So it is 9,500 times 135 because the cost per unit is 135. How much are we getting there? How much are we getting? 9,500. 9,500 times 135. You're going to be getting 1,282. 500, 1,282,500. That is the beginning of the month. So we had certain units, we had 9,500 units. The cost per unit for those units was 135. The total amount was that amount. So, but on the same day, we increased our stock because we were able to purchase. When I see there on the table given by the examiner on the side of the parties, we are being told on January 1st, 12,000 units were received at 150. So on the same date, right, we were able to be supplied with 12,000 units. 12,000 units, right, at 150. So you just tell me 12,000 units times 150, we are getting 1.8 million. We are getting 1.8 million. Now, these units that you have already purchased will be increasing our balances, right? Remember, when I purchase, I increase the stock. When I sell, I reduce my stock. So in this case, you have to be asking yourself in mind, how many units do I have already? I had 95. I purchased 12. So I have increased my units to how much? So I just take 9,500 plus 12,000. Here we are getting 21,500. 21,500. So you ask yourself, this 21,500 is valued at how much? So I just say 1,800,000 plus 1,282,500. And I'm going to be getting 30,82,500. I have already 21,500 worth 3,082,500. Now, from there, we go to date 3, because I told you we normally follow the ascending order. Date 3, also we purchased 3rd January. On 3rd January, we purchased 8,000 units. We purchased 8,000 units. The units that we were able to purchase, we purchased at 160. 160. So 8,000 times 160, you're going to be getting 1280,000. I have said every moment we are going to be purchasing. Once we purchase, right? Once we purchase, you increase the units, you increase your balances, right? So in this case, already in my store, I have 21,500, but I have purchased 8,000. So it means the total number of units that I have so far is 29,500, right? Then the valuation of those units will be amounting to how much? I will take 1,280 plus 30,82,500. So plus 3082,500. And I'm getting the valuation to be 43. It will be 4362,500. 4362,500. From the third day, we go to date 7, because date 7 you are able to sell. So on 7th January, there is a customer who came in our premises and asked for 12,000 units. Remember, you are using first in, first out method. So the first units that we had in our store is 9,500, right? Back on your mind to know very well that the customer is requiring 12,000, but you have to issue the first unit. And the first unit that you have to be issuing is 9,500. So in this case, you tell me here, you're going to be issuing 9,500 at this price. Don't ask me another price. It will be the price in which you are recording. This is a ledger card. It's not, you are not reporting a profit. So 9,500 at 135, we get 12,82,000. 12,82,500. Remember, this customer is not already fully satisfied. He is asking for 12. What is the balance? You say the balance is of 2,500. Where am I going to be getting in? The first units after I sell this one, they are being followed by 12,000 units. And I'm going to be selling 25 out of 12,000. So I will take 25 to satisfy the customer at 150. So 2,500 by 150, I'm going to be getting 375,000. 375,000. Already, you have given your customer 12,000, and also the total value that I was able to get again is amount to how much? 12,82,500. Sorry. The amount that I was able to get was 1657. 1657,500. This is the amount that I'm able to cash in. So already, because I have sold, it reduces your balances. You keep on updating, because we said the perpetual stock valuation is the only challenge. You keep on, right? It should be supported by a periodic system. So I have to be updating my records. Nimeuza out of 29,500, I've already sold 12,000, right? I've already sold 12,000. So the balance will be how much? I say 29,500. 29,500 minus 12,000 now, because we have already sold. And the number of the units in our store is 17,500. You have already subtracted from the amount that, from the total unit that you have sold. Then when you look on the balances at the end, you take 43,62,500, 43,62,500 minus 1657, 1657,500. And what you are going to be getting here is 27,05,000. In my store, I have 17,500. The balance is 27, or the valuation, they have just been valued as 27,05. Now from there, on date 8, so on 8th January, we were able to purchase. We purchased 10,000 units. 10,000 units at 155. 10,000 units at 155 is how much? This is equivalent to 1550,000. 1550,000. The units that you have already purchased, you take them to the store. So this will be 27,500 units, right? I said when I purchase, I increase my balances. When I issue, I reduce my balances. So already I have purchased 10,000, I will be able to increase. Then the amount will be 2705 plus 1550. I'm getting 4255. 4255,000. 4255,000. Right. Now, from date 8, we have been told in additional information number 2 that on 9th January 2020, the company reported a shortage. When you have a shortage, it means you are going to be deducting it, because a shortage, it means you might be having a spoiled unit. And these spoiled units, you have to be kicking them out. So on 9th January, out of the units that we have here, because these are the first units, 3,300 were able to spoil. So you say, out of the balance which is remaining here, 300 spoiled. So you deduct them at 150, right? This is equivalent to 45,000. So once I deduct from the store, because I have to be taking the spoiled product out of the store, the number of units currently which I'm remaining with is 27,200. And the balance is at the end, it will be 42,55,000 minus 45,000. I'm getting 42,10. 42,10,000. So already I have already subtracted the spoiled units out of my records. Then from there, we go to next date, which is date 13. I can see there is a customer requiring something there. Date 13. On 13th, on 13th January, on 13th January, we have been told that there is a customer who is requiring certain units there, 5,000. The question that I'm supposed to be asking myself, how many units are remaining here? I have already subtracted 2,500, which is here at 150 from 12,000. So 12,000 minus 2,500, I will remain with 95. Out of 95, 300 was spoiled. I subtract 300 and I say the number of units remaining in the first units which I have currently, it is 9,200. 9,200. So the customer on 13th required 5,000. So you just need to take 5,000 at 150. 5,000 from here at 150 because those units we are yet to exhaust them. So 5,000 by 150, we are getting 750,000. We are getting 750,000. So already I have to be subtracting my records here. So the number of units will be remaining 22,200 because already you have to subtract, right? You have sold 5,000 units, so I subtract here. Then 42,10,000, 42,000 minus 750, which you are able to pocket, it means we are remaining with that 460. That 460,000. That 460,000. Now from there, we focus on another date. After 13th, we go to 17th. On 17th January, tuliuza appear. I can see there is a customer requiring 8,000. Unakujanga tu naangalia hapa on the prices on how you are issuing. You see the balances which are remaining there. So I say 12,000 minus 2,500 minus 300 minus 5,000. The number of units remaining here are 4,200, but your customer requires 8,000. The first in, you have to issue them first. So the balance is 4,200 at 150. So 4,200 by 150, we are getting 630. 630. Then from there, you have not already satisfied the customer. So we go to the next because already I have exhausted this. I come to 8,000 and I look on the customer requires 8,000. I have already given him or her 4,200. So the balance of that 600, you will take on the next units, which are 8,000. I take that 600 by 160. So that 600 by 160, you are getting 576. So the totals here, umepea customer wako 8,000. Then the total amount I am able to get is 12,06,000. 12,06,000. When I take 22,200 minus 800, which 8,000, which I'm able to sell, 22,200 minus 8,000, I will be able to get 14,200, which will be valued how much? That 460 minus 1246. That 460 minus 1246, we are getting 2254. 2254,000. That is what you normally do. I think you are following. Then on 20th January, we were able to purchase, to increase our units. I can see we purchased 12,000 units at 140, right? 12,000 units by 140 I'm getting 1680,000. So when I purchase it, it means you increase your balances. So 14,200 plus 12,000, we are getting 26,200. 26,200. Then the other one will be 2254 plus 1680. I'm getting 39,34,000. 39,34,000. You are able to purchase these, right? Once you purchase, you increase your balances. When you are issuing, you reduce your balance. That is after 20th. On 23rd, sorry, we also did the same. I could see we were able to skip one of the additional information in note number 3. We have been told on 19th January 2020, 600 units of the units sold on 17th January 2020 were returned by the customer. I was able to skip that. Sorry for that. So remember, part of the unit that we were able to sell here were returned. So on 19th, so this is what we normally do. On 19th January, we are being told there is a return, by the way. 600 units which are returned, right? 600 which were returned, which we sold were returned. So the last unit that we issued is at 600. The 600 were returned. Maybe they did not meet the customer's preference, so they were returned 600. You record at 160. You record at 160. So in this case, you say 600 times 160. We are getting 96,000. We are getting 96,000. Take them to the store because already they were returned. We are not told they were spoiled. So we are going to be having 14,800, right? 22,400 plus 22,54,000. We are going to be getting 2350. Then we can proceed to our day 20, which we are saying we are purchasing. So on 20th January, we were able to purchase. We have said we purchased how much? 12,000 at 140. So 12,000 by 140, I was able to get 1680. I continue increasing my balances. So this will be 26,800. 26,800. Then the total value will be 40,30. 40,30,000. That is on 20th. And then when you go to 23rd also, we were able to purchase. So 23rd we purchased. So on 23rd, we were able to purchase 7,000 units. 7,000 units at 152.5. 152,5 shillings. So 152.5 times 7,000. We are getting 1067. 1067,500. Take them to the store. It means you are going to be having 33,800 units, right? 33,800 units. Then you take, you increase also the amount plus 40,30, which is 5097. 5097,500. 5097,500. Then from there, we go to the next one. We have been told in sorry?
A question.
Yes.
The goods that were returned, why are we using 160?
Because these are the last units that we issued. These are the last. You issued at 160. So yes. The return, when you are coming up with a credit note, so you normally record the price that you sold with. So we sold at 160. So we record at 160. They were returned, right? Okay. So it means they are going to be offset. It means they will be able to reduce also this amount by this amount. 576 will be reduced because already out of the amount that already we have been paid, 96,000 worth of 600 units were not were returned, they were not justifiable. So that is why we record at the last price that we issued with. Is it okay?
Okay. Yes.
Now, when you look on day 27, the customer requires something there. 27th January, the customer requires certain units. How much?
25.
Sorry?
25.
10,000, yes. So if the customer requires 10,000, remember out of 160 here, you took that 600. When you look at it.
We have 25.
Sorry?
25.
We have 25th. Okay, so on 25th, the customer requires 11,000. Thank you. So if the customer required 11,000, I was explaining something here. Out of the 8,000, I was able to issue that 600. How many units are remaining there? 8,000 minus that 600. We get 4,400, right?
Yes.
At 160. 4,400 by 160. We'll be able to get 704,000. We have not already satisfied that customer. He requires 11,000. So 11,000 minus 4,400 is how much? 6,600, which we are going to be taking on the next unit that we have in the store. 10,000. We take 6,600 to satisfy that customer at 155. So 6,600 times 155, you're going to be getting 1023,000. 1023,000. So it means already I'm able to satisfy my customer, given him or her 11,000 units. What will be the total value that I was able to pocket? Plus 704,000, which is 1,727. Then we reduce our balances now because already I have issued. So 33,800. Let me start with the amount. 50,97,500 minus 1,727. I'm going to be getting 33,70,500. 33,70,500, like that. Then the units will be 22,800. The unit will be 22,800. Now, on day 27, on 27 January, I can see the customer requires 10,000. So nikiangalia hapa, right? What is the balance here? 3,400. Because already I have issued 66 out of 10,000. So 3,400 is remaining. 3,400. Right? At 155 amounts to how much? 3,400 by 155. We'll be able to get 527. Right? The next unit here, I can see 600. So we issue our return now, 600 again at 160, which is 96,000. Which is 96,000. And to just satisfy the customer because it requires 10,000, but we have already issued 4,000. So the balance of 6,000, we are going to be taking it from 12,000. So we talk about 6,000 at 140. 6,000 by 140, we are getting 840. So the total here is how much? Here already we have 10,000, right? We have 10,000. Then the other one will be how much? You have 10,000 there. So we have 527,000 plus 96,000 plus 840. We are getting 1,463. 1,463,000. Reduce your balances. Here will be 12,800. 12,800. Then 33,70,500 minus answer. You're going to be having 1907. 500. 1907,500. I think you are following.
Yes.
Then the last day, we have been told the customer required how much?
200 units.
The last day customer required certain units there. 200 units. The customer required 200 units. So in this case, I've just been told that on that 1st January, the customer alikuwa anahitaji 200, 200 units, right? 200 units. So already ushafika hapa kwa 140, umetoa 6,000, right? Kuna 1,000 karibu 6 also to issue. Customer amekuja anataka 200, I issue at 140. I issue at 140. This is 28,000. That is 28,000, right? That is 28,000. Deduct your balances there. You're going to be having 12,600 units. 12,600 units. Amount should be how much? Amount should be how much?
1879,500.
1879,500. 1879,500. That is how you normally do. Now, when I look on the requirement too, the customer is asking, not the customer, but the examiner is asking about, examiner is asking about what? The valuation. I've been told the valuation of the closing stock. So if we want to look on the valuation of the closing stock, we look on the number of the units that we are yet to issue. The valuation of the closing stock. When I look at it, already here we had 6,000 which were remaining. You have issued to 200. You remain with 5,800. 5,800, right? 5,800 by 140 is how much? 5,800 by 140. 5,800 by 140. Is it 812? 812 there. Then the other one we have is 7,000.
So,
Are you okay?
yes.
So it should be. The other one will be 7,000. I could see there is an area we have made a mistake, but I don't know is where. 7,000, by that we get 1067,500. The number of the units in our valuation, it should be 12,800, right? 12,800. Then here, it should be totaling to how much? 812,000 plus 1067,500. 1879. 1879,500. 1879,500. When you look at it, 1879 is correct is here. It means there is an area we have made an error of 200 because the number of the units also should be totaling to 12,800. The number of the units should be 1,200. I think there is an area, but you will be able to follow and do some corrections. There is an area where we made that difference of 2 because it should be 12,800. 12,800. Because when you look at it, 5,800 times 140 and 7,000 times 152.5, you are getting the exact amount. So it means there is an area in the number of the units we made an error, but that one you'll be able to make some clarification. Have you understood?
Yes.
You will be able to look at it when you are doing your revisions. And I will also continue showing you how to do the valuation to match your balances. Now, I just want to do the next method. The next method for us is the LIFO. The next method is LIFO. So LIFO, this is the last in, first out. Last in, first out. So it means when you go to the hardware, I will give you a good example. When you go to the hardware, you normally find that we normally issue units in the hardwares. Wanaendanga wakati unaitisha product, they give you the product which is already hapo kwa mlango yenye imeingia leo, right? If there is a product yenye imeingia leo wanakupea. Why? because a simiti huwezi niambia simiti eti ina expire kesho kutwa. It normally have a lifespan, a long lifespan. Now, in that scenario, nobody would be looking on the units which came first, which were able to open the shops, ama machume and so on. So in that scenario, in the last in first out, first out, LIFO. So in this scenario, it is very simple because we are saying that we normally, the items which are received first, right? Items received first, last, sorry, are issued first. The items received last are issued first. Very simple. Now, I just want to do a store ledger card because we normally do store ledger cards. And I will be able to do a question of November 2015. It is also a question of the FIFO, but I will be able to do using LIFO. I'll do that question for LIFO. So you can be able to repeat the same question using all the methods, no problem with it, because you're just practicing. But I just want to apply the same question to do my LIFO. I do my LIFO. November 2015.
Question 3.
Yes, there is a question there. Question 3B. So we are being told that the Kenya stores provided the following information in respect of their operations for the month of July 2015. We are being given the receipts and issues together with the dates here. When you look on this question, it's different from the one that we have done, but you have to factor that in these units, there is no selling price. I say there is no any aspect of the selling price when you are preparing your store ledger cards. So in this scenario, or in this question, what you need to do, we do the similar way, but we are applying the LIFO, last in, first out. So when I look on the required, the examiner is telling me to come up with a store ledger card of Kenya stores for the month of July 2015. I have said I use this example. It is a question FIFO, but I want to do this question using the LIFO method. Now, I will just share my board because you have seen the question, so that we can read as we do the question. We can do as we can be able to do it. We can do as we, a minute, please. Okay, now I just want to do the last in, first out method. Last in, first out method. And in this scenario, we just need to focus on doing that question, which I've already given you here. So the question that we are doing is for November 2015. Question number 3B. So we do using LIFO. So in this case, the format does not change. The format remains the same. So we have our dates, we have receipts, right? We have our issues, and then we have our balances. We have our balances there. So you're going to be recording again. You're going to be recording your units, cost per unit. Then we have our amount. We're also going to be recording your units, cost per unit. And then we are going to be recording also amount for the issues. Then for balances, you do the same. You record your units, cost per unit, and then we have our amount there. We have our amount there. So you normally start with the first day, providing the additional information. Because additional information, number one, they are saying the material in the stores is at 30th June 2015 were 2,000 units at 50. So on the first day, we opened, because we are doing for July, on the 1st July, we opened with how much? With 2,000 units. You saw, you record on the side of the balances, 2,000 at 50. This is equivalent to 100,000. This is equivalent to 100,000. And then we are being also told on 9 July 2015, on the 3, 600 units we were able to purchase on the receipts. So on the 3, on 3rd, what happened? On 3rd, we purchased 600 units at 60. This is equivalent to that 6,000. Once you purchase, I have told you, you normally increase your balances. So the units will be 2,600, and then the balances will be 136,000. Right? That is on 3rd. On 5th, when you look on the 5th, we were able to sell. The customer demanded 1,600. So I will sell the last thing. We sell the last thing. So I will issue the last units which entered our stores. So I will issue the last units, which is 600 at 60, which is that 6,000. The customer Jetosheka, there is an aspect of additional units of 1,000. I will be able to take from the first units of ours. So 1,000 at 50. We get how much? 5,000, 50,000, sorry. So the total number of units is 1,600, and here is 86,000. When you go to your stores, you deduct here 26. So it means you deduct 2,600 you deduct 1,600 from 2,600. You remain with 1,000. What is the balance here? I can see it's 50,000. 50,000, like that. 50,000. 1,000, 50,000. That is also a good aspect. When you look on the other one, we are being told on 7th. 7th, we are being told there is a problem. So on 7th, we are being told that we purchased 1,000 units. We wanted to increase our goods, 1,000 at 70. So this is 70,000. So when I purchase, I said I increase my balances. I go to my store. It means already I know I have 2,000 units valued at how much? 120,000. 120,000, because I take 50 plus 70, which is 120. From there, after 7th, I can see in additional information we have date 9, of which I have been told on 9 July 2015. Part of the material issued on 5th, these ones were returned. All right, amounted to 200 units were returned. So in this case on 9, there was a return of 200 units. The last units we were able to issue is for 1,000. So you record at 50. This is equivalent to 10,000. Peleka store, because they returned, whether they did not, they were not satisfiable. So here it is 2,200, and then here is 130. There's 130. There's 130. Now, from there on 9th, we go to another date in ascending order. On 12th, we were able to issue 12th July. We issued 400. The last thing, they were our returns, 200 units. You issue them first at 50, 10,000. Huyu customer pia alikuwa anataka 400, nimempea 200, umebaki 200 na ichukua hapa kwa 70. So 200, right, from 1,000 at 70, This comes to 14,000. So this is 400. This is 24,000. That is 24,000. When you deduct here, we remain with 1,800. 1,800 because it's 24. Nimeuza 400. I remain with 1,800. But 130 minus 24, we get 106,000. We get 106,000 like that. Get 106,000. Now, as we continue, we get 106. Now, let us continue from here. From 12, we have another day. I can see on additional information I've been told. On 15 July 2015, 100 units were returned to Kenya stores. 100 units tulirudishiwa on 15. Warudisha 100 units. From the last ones which we were able to issue by 70, this is 7,000. The liquor store, here we are going to be having 1,900, right? And then here we are going to be having 113. 113,000. 113,000. Then from there, we have been told on date, after date 15, we have date 18. What happened on date 18? On 18th January, on July, sorry, 2,400 units to be purchased, by the way. We increased our stocks. So 2,400 by 80. It should be 2,400 by 80, equivalent to 192,000. 192,000. When I purchase, I increase my balances. So this comes to 4,300. And here we had 113,000. This is 3 of 5. This is 3 of 5,000 there. Then after 18th, what is happening there? I can see on 20th now, we were able to issue 20th July, we issued how much? 12. The last team were 24. So I will take 1,200. Customer amekuja sahi anataka 1,200 at 80. 1,200 by 80, we are getting 96,000. Toanisha, because already this is the amount umepata, this is the number of the units you have sold. Here we remain with 3,100, right? Then 3 of 5,000 minus 96,000. We get 209,000. 209,000, like that. Then after that day, I'm being told on date 4 or additional information 4, on 21st July 2015, there was a material wastage of 500. So in this case, that is 21st. There was a wastage, by the way, but you record from the last, right? So it is 500 by 80. These are wastage, we remove it. We record as an issue. So it is 500 by 80. This is 40,000, right? So 500 minus that 100 minus 500, I'm going to be getting 2,600. Then 209 minus 40, we are getting 169,000. 169,000. Now from the 21st, I've been told on note number, that is 20th, we have on note number 5, returns from a June 2015 issued of 100 units at 45 was received on 25th July. So hapa we have 25th. Kulikuwa na returns are 100. These are the returns at 45. But remember they are for the previous period. This is 4,500. As I take to the store, I will be able to get 2,700, right? Then 169 plus 169 plus 45. We'll be able to get 173. 173,500. Then from that date, we go to date number after 25th. We go to which date? After 25th, I can see on 28th. On 20 July 2015, there was a shortage of 20. There was a shortage of 20. That is on 28th. So if the shortage we record with this one, it was 20 by 45. 20 by 45 is how much? 900. Right? So this will be remaining. There must be a problem somewhere. There must be a problem somewhere. Let me check where the problem in that question arising. Let me check. It is okay. So this is 2680. 2680. Then we have 173, 500 minus 900, which is 172. 172, 600. That is 28. Then we have day 29 now. Day 29, there was an issue. So 29 to issue how much? To issue 600. Remember hapa, umetoa shortage, umebaki na 80 units hapa. So it is 80 by 45. 80 by 45. That's 600. Hizo umemalizana nazo. Already when I look on 2400, I was able to deduct two things here. I was able to deduct 1700 from 24. So what was the balance there? They remain with 700 units. 700, right? But the customer required how much? 600. So I just take 600 out of 700. So I just need 600 by 80. 600 by 80. This 600, no, that is wrong. The customer, the balance, because already we compare 80, the balance is 520. Sorry, at 80. 520 by 80, you get how much? 41,600. 41,600, right? So already we satisfy the customer by giving 600 units. How much is here? So 41,600 plus that 600, we are getting 45,200. So once we deduct, here we are going to be remaining with 2080, right? Then we have 172,600 minus 45,200, and then we remain with 127,400. Then we have the last day, 31st July. That 1st July. When you look on that 1st July, we are being told the customer required 200 units. Remember this already, you are remaining with certain units here. How many units? How many units remaining here? Already nilikuwa nimebakisha 700, nikaissue 520. Kumebaki ngapi kwa 700 yenye ilikuwa imebaki kwa 2400?
180.
180, very good. So it will be 180 by 80. By 80. 14,400. 14,400. Then 20 itatoka wapi? Because the customer required 200. When I look on this return, it has not been issued again. This return has not been issued again. So in this case, we say here, we take 20 out of that return of 120 by 70. This is 1,400. So this is 200. How much is this? 15,800. 15,800. So this is 1880. Then 1274, 400. 1274, right? Minus my answer. You're going to be remaining with 111,600. 111,600. So if the examiner is asking again to do the valuation of the stock, let me do it here. Valuation of closing stock. The valuation of closing stock, right? Now it is very simple because already you know these units already you have exhausted them fully. These ones fully exhausted. So in these 100 you have just taken 20. So there is 80 remaining by 70, getting 5,600. out of this. Then when I look on this 200 here, we were able to issue it here. So that is already exhausted. In this 1,000, we took 200. So it means in this 1,000, there is 800 units remaining by 70, getting 56,000. Getting 56,000, right? This one was exhausted because it is this one. We were able to issue. Then we came to this opening balance of ours. We subtracted 1,000 and they remained with our 1,000 there. So 1,000 by 50, getting 50,000. Look on whether you are getting the same as your totals. When I look on the units, it's 80 plus 800 plus 1,000. We are getting 1,880, right? Then I look on this balance. This should also be totaling to what you have gotten here. So it should be 5,600 plus 56,000 plus 50,000. You are getting 111,600. 111,600. Is it okay like that?
Yes.
We understood?
Yes.
That is how you normally do. That is how you normally do LIFO. That is how you normally do LIFO. I just want to move to weighted average method. Weighted average method, which is one of the simplest methods. But in weighted average method, we are going to be doing last semester's question where the results are yet to be coming out. So let us do last semester question for weighted average method. I will be able to explain also what it means. The weighted average, I will be able to explain what it means. Let us look in 2022, August. 2022, August. There is a question there. Very good. There is a question 1B, August 2022. August 2022 is very simple. You can read for me the question. You can read for me. The question is already on my board.
The following information relates to store, receipts, and the issue of material are in small manufacturing enterprise for the month of April 2002. We are given the information there. And it's the company policy to use the weighted average method when valuing the materials. Require and store ledger account for the month of April 2002.
So the weighted, it is very simple. When you look on the aspect of the weighted, we normally do our questions similar to what already we have done, but what we have to do in our balances, once you get the balances on the side of the balance on your store ledger card, you have to calculate the weighted price, which you are going to be using to issue, So we are saying it is a method of stock valuation in which the items are issued based on the weighted average price of the items existing in the store. So just not to explain much, let me just do the question so that you can be able to understand better. So let me do the question here. So the question I have said, it is for August 2022, question number 1B. So you just record your dates, kuna receipts, right? Kuna issues. Then we have our balances. So here we'll be able to record my units, cost per unit. Then we have our amount, Here we have our units, cost per unit. We have my amount. I have units, cost per unit, and then to an amount hapo mwisho. I think this one should be the biggest one. It should be, let me squeeze my space. Cost per unit, and then we have the amount. And here we are going to be having units. Because the cost per unit will be playing the key role here now. We have to be calculating each and every time. Each and every time. Each and every time. So I just want to start with the first question, because the examiner has already given you the information there. So the first thing that, because the examiner said the following information related to the store receipts and issues of material are in a small manufacturing enterprise for the month of April. So on April 1st, there was an open inventory. You just tell me on 1st April, on the 1st April, we had some balances here. So the balances were 4,000 at 100, and this comes to 400,000. 400,000 total amount. On 4th, we issued 3,000 units. No problem with that. So here we say, and here we are not going to be following the criteria of last and first. So don't just get confused. So on 4th, the customer required 3,000 units. So here it is 3,000. You issue at 100. The cost per unit of yours is 100, right? So you're going to be getting the amount, which is 300,000. So after I issue 3,000, it means the number of units remaining is 1,000. And also the total amount, it is 100,000. Calculate the cost per unit. Take the total amount, you divide by the number of the units, and the cost per unit will remain 100. Are we together?
Pardon?
I have said, every time you do your balances, you have to be calculating the cost per unit. So I just take the total amount, I divide by the units, I get the cost per unit. I get the cost per unit. Every time we calculate our balances. Let's look on when we include note number 5. So, sorry, the fifth day. We are being told on the 5th day, we were able to purchase 9,000 units. Right? 9,000 units at 120. Right? So 9,000 by 120, I'm getting 1080,000. As our criteria, we understand when I purchase, I increase my balances. So it means then the total number of units that I have is 10,000. What about my balances? 1080 plus 100,000, you're going to be getting 1180,000. Calculate the cost per unit. This cost per unit is the one that you're going to be issuing, using when we are issuing. So calculate the cost per unit. So I just take 1180,000, I divide by 10,000. Divide by 10,000 to determine the cost per unit. In this case is 108. Is it 108? No, it should be 118. 118. Is it okay?
Yes.
Have you understood? We have to calculate the cost per unit in the weighted average method. Let me write here. Weighted. That is called average. That is why it is called average method. The weighted average method. Then from there, I've been told not on date 9th. On 9th, we issued at 200. Don't mind where they are coming from, because already we have enough units in the store. So just come here, you record that 200. What we are concentrating more in the cost per unit, you have to be issuing with the average calculated prices. Now, 118, that 200 times 118 is how much? 377,600. 377,600. So 10,000 minus 32, how many units in the back key? How many units zimebaki? And then I take 1180 minus 377 600.
6,800 units.
6,800. And then the total here is 802,400. So calculate the cost per unit, divide by 6,800. I'm getting also 118. Getting 118 there. On 12th, we have been told, return to stores 2,000 units from the issue of 4th. When you look on the 4th, we issued 3,000. But now, we have some returns for 2,000. So that is which date? Day 12. So on 12, we have been told there was a return of 2,000. Out of the 3,000, 2,000 were returned. So 2,000, which is our return. We return at the price that we were able to issue with, which is 100. This is 200,000 returns. Go and update your record. It means here, the number of units right now that I have is 8,800. Then here it will be 822,400. So you say 822,400 divide by 8,800. How much are we getting? 93 points. Are you getting 93.5?
Yes.
Sorry? Any challenge so far?
No.
It should, because 802,400 plus 200,000, it should be a different figure. This is wrong.
Which one?
It should be 1,2,400. And then I divide by 8,800. It should be 113.9. Now I can put 114. Are we together at that point now?
Yes.
Good. Then from there, because it's on 12th, we have on 15th, we purchased 4,800. Right? We have said on 15th, we purchased 4,800. Right? So 4,800, you were able to purchase at 130. So 4,800 by 130 is how much? 624,000. Take them to store. How many units? How many units so far? You have bought 4,800. The balance of the unit that you have is 88. Once you increase, once you add, because we said on the receipts we add. So 800 plus 4,800 is how much? Is it 13,600?
13,600.
Very good. 13,600. 13,600. 13,600. 13,600. What is the cost per unit? Are you getting 120?
We are rounding off.
Yes, yes. Let us round up. 120, right?
Yes.
Now, from that day, we have date 18. We have been told what on 18? On 18th, we have been told that the return to supplier 400 units out of the quantity received on 5th April, right? So this is the return outward. And we have been told the return to supplier 400 units from the goods which you are able to purchase, these ones. So we deduct because already the number of the units are here. So the return outward, we subtract. To reduce the number of the unit that we have in the store. So in this case, we have been told it is 400 units. Tulirudisha sisi sasa. Return outward is not return inward. By 120. 400 by 120 is how much? 48,000. So in this case here we have 13,200. Is it 13,200? Are we together at that point?
Yes, that is not the.
Because it is a return outward. Ni sisi tuna return. So you are reducing. That is why we record for issues. So that we can offset the 400, which we are returning to the supplier. Now, the balance here will be 1578. 1578 400. You divide by 13,200. So we are also getting 120. Are we together at that point?
Yes.
Now, we have on 25th, we purchased 2,000 units at 140. 25th, we were able to purchase 2,000 units at 140. This is equivalent to 280. I think it's 280,000. Then I increase the number of the units that I have in my store. So it will be 15,200. 15,200. Then also it increased my balances. So 1578 400, right? Plus 280,000. We are getting 1858. 1858 400. Divide by 15,200. We get 122. Are we together at that point?
Yes.
On 28th, we are being told we issued. We issue how much? We are being told is 4,200. Una issue the last weighted average price, which is 122. So 4,200 by 122, we are getting 514. 512, sorry. 512 400. 512 400. 15,200 minus 4,200. We are getting 11,000 here. Then 1858 400 minus 512 400. We are getting 1346. 1346,000 divided by 11,000. We are getting 122. Getting 122. Are we okay?
Yeah.
Then on 29th, we were able to purchase. 29th, we purchased how much? 2,400 by 150. 2,400 by 150. 2,400 by 150, which is 360,000. So let me first subtract the amount, 1346,000, which is 986,000. Then subtract the units, 11,000 minus 2,400. We are getting 8,600. So 986,000 minus divide by answer. We are getting
Why
one.
are we subtracting?
Sorry?
Why
it
are
should
we
be addition. Thank you. Should be addition. Sorry. Now 11,000 plus 2,400. We get 13,400. Sorry for that. Then 1346,000 plus 360. I'm getting 1706. 1706,000 divide by 13,400. Are we getting 127? Check whether we are getting 127.
Yes.
Then on 30th, we issued 5,600. 5,600 by 127. 5,600 by 127. We are getting 711. 200. So the number of units reduces, but let me reduce the amount first. 944, 994, 800, then 13,400 minus 5,600. We are getting 7,800. Achia examiner umemcalculate the cost per unit hata kama umemaliza. So 994 800 divided by answer, we get 128. 128. Any question? Any question?
No.
Any questions so far?
No.
So I can do the other one. I can do the other method because already I have done the first three. I just want to do the simple, and the simple average method, I'm going to be using this one, right? I will be able to use the same illustration. So the simple average method, it is basically one of the simple things that we have to be doing or working on. Or I can do using the November 2015 so that you can understand better. Because we are saying it that the simple average price method is just a method of stock valuation. It will the average prices of the prices existing in the inventory used to determine the issue price. What do I mean? What do I mean? This is what I mean now. The weighted, remember, when you are going to be calculating, right? When you are going to be doing the weighted, all the cost per unit prices existing in the inventory are basically averaged, right? Are basically averaged and are used to calculate the cost. Are basically, we normally average the prices existing in our score ledger card, right? And then we use them, the average price that we have already calculated to issue. To make you understand better, let me do 2015. I think it is the one that is well will be able to understand very well. Let's look for it. We do simple. November 2015. Sorry?
The question we have just solved.
Yes. I've said I just want to use November 2015 question for us to be able to use or to know how to calculate the simple average method. They have never tested the weighted, so it means they might be also be bringing the weighted also. So the Kenner stores. The Kenner stores. So the question is here with us, and I just want to use the Kenner stores question to calculate this issue of the weighted simple average method. Sorry. So in this scenario, I will be able to look on some few elements, and we have to be calculating. We have to be calculating the average prices existing in the inventory. That is what we have said. So I just want to quickly start the question so that we can be able to understand further how to calculate it. So let me start the question because already we have already tackled it somewhere. I will not read all of it, but with this is the question that we are going to be using. So let me go back to my board. So we are doing November 2015, question number 3B. But we are using what? Simple average method. Simple average method. Simple average method. So we record our dates, right? We record our receipts. We record our issues. And then later on, we record our balances. We record our balances. So here we have units, cost per unit, and then we have amount. We have units, cost per unit, and we have amount. We have units, cost per unit, and then we have amount. Something looking like that. So when I look on the question now, the question we have been told on the first on the first day of the month, we were able to have certain units of balancing opening inventory. We have been told the material in stores is at that is June 2015 were 2,000. So they will be recording them as my opening at 50. These are 100,000. That is 100,000. Then on third, we have been told on third, we have been told we purchase 600 units at 60, coming to that 6,000. You take them to store. We are going to be having 2,600. The total amount is 136. 136,000. From there, on 5th, we have been told we issued. Don't consider any method of issue. Just issue your units because already you have. So it will be 1,600. But how much are we going to be issuing? We have said in the simple average method, we normally look on the prices which are existing on your college account, like currently. So what do we have? We have 50 and 60, right? 50 and 60 are the only prices existing on my ledger scorecard. I use them to calculate my average price, which I will be able to use when I'm issuing. For instance, I take 50 plus 60, divide by 2, and I'm getting 55. Have you understood? So
Yes.
this 55 is the one that you are going to be using when you are issuing, sorry. You issue at 55. I have considered the prices of the commodities which are existing. By the way, the simple average method, tunatumianga the first in faster, because we know once this price is already exhausted, we will not be able to use it when we are calculating what? When we are calculating our average price when we are issuing. What do I mean? Let us finish this and we look on whether we come up with that problem. Now, in this scenario, we have 1,600 by 55, we get 88,000. So it means my balance here is 1,000. Is 1,000. What about the total amount? I take 136,000
48.
minus answer, and I will be able to get 48,000. Thank you. I'll be able to get 48,000. That is on 5th. Then from there, we look on 7th. On date 7, we had 1,000 units, right? At 70, what we are getting is 70,000, right? 70 and all that. So here we are going to be having 2,000, and then here is 118. 118,000. 118,000. From there, we have date 9. On 9th, we are being told there is a return of 200 units, which we have already sold. So we record at 55. We record at 55, the price that you sold with. So 55 times 200, we get 11,000. 11,000. So go to the store and you increase. This is 2,200, right? 2,200, and this is 107,000. 107,000. Are we together at that point? Are we together?
Yes. 107. Why? Are we reducing?
22. Yes, should be 129,000, right?
Yeah.
Is it 129? Good, I can see you are following. On 12th, what happened on 12th? On 12th, I've been told we were able to sell. How much do they require? They require 400. Which price are we going to be using? You have not exhausted 2,000 units because you already issued 1,600. There is 400 which you want to issue right now. So how am I going to be calculating? I look on the price which are existing on my ledger. I have 50, we have 60, we have 70. What about 55? I told you that the 55 is already an average price and we cannot be able to use it to calculate another average price. So what am I going to be doing? I take 50 plus 60 plus 70, and then you divide by 3. 50 plus 60 plus 70. Divide it by 3 and we get 60. So hapo na issue na 60. Getting 24,000 unless you have not understood. 24,000. Then deduct here 1,800. Deduct on the other side. We are going to be getting 105,000. 105,000. 105,000. That is what we normally do. Don't use the average prices to calculate another average. No. Once is an average, it cannot be used to calculate an average price. That is okay. Then let's look on the other date, which is date 15. We are being told on 15th July 2015, 100 units were returned. Imagine hizi tu nimeuza, wamerudisha 100. On 15th, wamerudisha 100, which is a return, right? At 60. So this is 6,000. Peleka store. This is 1,900. How much is this? 111,000. 111,000. Then from 15, we have on date 18, which I'm being told I purchased on 18th. We purchased 2,400 at 80. We said is 192,000. Take it to the store. We said is 4,300. 4,300, right? Then 192,000 plus 111,000, you get how much? 3 or 3,000. 3 or 3,000. Are we together at that point? 3 or 3,000. That is on date 18. Then we have another date here, which is on 20th. 20th customer aliitisha goods worth 1,200. So tuna issue. But tuta issue na price gani? Nasema already, the 2,000 has already been exhausted. And when you look at it here, the 2,000 has already been exhausted. So the cost per unit of this cannot be able to determine how much we are issuing because already I have exhausted the 2,000. So I look on the other prices. Remember, this is an average price. So which price am I going to be using? I will be able to use 60, 70, and 80. Those are the current prices existing on my ledger. So I have said you take 60 plus 70 plus 80, divide by 3. Why am I not taking 50? Because these units we have already exhausted. So you cannot be able to use it to calculate an average price again. So 60 plus 70 plus 80. Divide by 3, we get 70. So we issue at 70 here. So 1,200 times answer, it is 84,000. So here is that 100. 3 or 3,000 minus answer, and we are getting 219,000. 219,000. That is on 20th. From there, we have 21st. What is happening on 21st? We are being told on 21st, there was a material shortage. There was a material shortage of 500. Najua vizuri because the simple average ni kama inafuata the fasting. Already these units are already exhausted. Because hapa tulieka 1,200. So inamaanisha tulichukua 600 hapa na another 600 here. So hapa kumebaki bado. Hapa kuna units. Hii imekuwa exhausted sasa. Kumebaki units hapa of 400, I think. So what is the issue price? I take 70 plus 80. 70 plus 80. 70, let me write it here. Divide by 2. This is 75. So we issue at 75. Because the only existing price is 70 and 80. 60 and 50 you have already exhausted. Very good. So 500 times 75. Is that 7,500? That's 7,500. So here we remain with 2,600. What about the total amount? 219,000 minus 37,500. We get 181,500. 181,500. Then we have 25th. What is happening on 25th? We have been told here by this exam on 25th. Returns from the June. Remember, these are returns from the previous, not the current. Is that right? Now, these returns are just like a new receipt. This return is the previous month, not for the current month. So zilikuwa za 100 at 45, getting 4,500. This is 2,700, right? 181,500 plus 4,500. We get 186. 186, right? Then from there we are being told on 28th, what is happening? 28th, there is a shortage of 20 units. Shortage tulisema tunatoa. But hii shortage tutatumia nini? This one, remember, hapo umeissue 500, right? Umeissue 12. So already umeexhaust this one, right? So inamaanisha stock yetu iko kwa hizi returns, which we said we cannot use the average prices. So the only existing prices, fresh prices, ni 8 na 45. I want you to get me clear. This price is for the previous month, not for the current. So we don't know whether they used to calculate the average price. So in this case, we treat it as a new price. 80 plus 45 is now we use to calculate. 80 plus 45 divided by 2. How much are you getting? 80 plus 45 divided by 2. You get 62.5. 62.5, right? Times 20. 1250. So once you deduct, this is 2680. What about the other side? 186,000 minus answer. We get 184. 184,750. Then we have on date 29. We have not exhausted any of these, so we are going to be using the same average price. So 29, we were able to issue 600 units at 62.5. So 62.5 times 600, we get that 75. That's 75. Subtract here, we are going to be having 2080, right? 184,750 minus 600. We get 184,150. 184,150. And then the last day, that first. On that first, customer alikujia 200 tukampa. 200 at the same, because we have not exhausted these units. So at 62.5. 62.5 times 200.
There is a
Sorry?
problem. The remaining balance 184,150.
It should be how much?
147,250.
What have I done? Correct. How much is that?
147,250.
250.
147,250.
147,250. 147,250. Thank you. Then let us reduce this one. So this is 1880. Good. Then the other one will be 147,250 minus 12,500, and we get 134,750. 134,750. 750. Any question? Any questions so far? There, I know I have nimefunza a lot of things, yeah? So it needs a lot of practice. Now, let us do the last one. The last one was the standard average price method. Standard average price method. Hii ni rahisi sana. I just want to explain here so that you just go and do it. So the standard price method, we say, it is the price at which the items are issued determined by the management in advance. The price used to issue is determined by the management in advance, right? So hii ni kama tuna set before tuanze mwaka yetu, right? A financial year. Tuna set in advance. So in this case, it means the price at which we are going to be setting ndio tunatumia all through in issue, right? The price that we are going to be setting. So these prices are arrived at after taking into consideration the inflation, political instability, demand and supply, and so on. So this price is not normally known as the standard because it is an estimate. So in this case, let us assume the issue price will be Kenya shillings 70. Sawa. So every time you issue here, every time we issue at 70 all through. Every time you issue at 70. So that is why I wanted to give it as an assignment. You do the same, but when you are issuing, you issue at 70. I can't repeat that. That is very simple. You issue at 70. So here, 70, 70, 70, 70, 70, 70, 70. Are we together?
Yeah.
So that is just the how we calculate the standard price method. Nothing else. Nothing else. So I want us to reach at that point, and I will be able to see whether we can meet tomorrow afternoon. We do inventory management, where we are going to be discussing our EOQ, EBQ, EOQ with discounts and so on, so that next week we can push on labor remunerations and overheads together with FBC. We see whether we can be able to finish this topic. When this topic is done, I normally feel I'm finishing management accounting syllabus. This topic is very wide, and therefore we need to sacrifice a bit. I will be able to set a lot of time starting next week. I think I will not be having a lot of commitments and so on. Now, I just want us to stop at that point, and therefore next week on Monday also, we are going to be starting our tax class. Tax will be starting on Monday evening. I don't know whether you'll be able, or you will be a bit held up like this week.